Hello, and welcome to the virtual ASM 21. My name is Shane Dooling, and I'm from CDSPI, and I'm very pleased to announce and introduce Lisa Philp and the CDSPI session for Make More, Keep More with Lisa Philp and CDSPI. First, I'd like to take care of some housekeeping details. This session is going to run about an hour and a half. It is a designated category 3, and it carries with it 2 CE points. If you have a question, please use the text chat box, which will be displayed on your screen. In order to receive your category 3 designation, you must complete the entire 90 minutes. You will receive an attendance verification in the next 4 weeks. The session descriptor can be found in the speaker roster located in the navigation bar, accessible in the lobby when you log in. If you miss this session, you can view it on demand from May 10th until May the 31st. Again, my name is Shane Dooling, and I'm an investment planning advisor at CDSPI Advisory Services, Inc. My role at CDSPI is to provide investment planning expertise in the areas of tax planning, estate planning, retirement, and wealth management. I'm well-versed in helping dentists leverage their business assets through incorporation or the sale of their dental practice. I hold both the Certified Financial Planner, or CFP, and the Financial Management Advisor, FMA designations. I have over 20 years of experience working with high net worth clients, such as physicians, accountants, lawyers, and dentists. My co-presenter today is Lisa Philp. She is a dentistry industry leader, an author, an advisor, a coach, and a speaker. And she's the Chief Visionary Officer of Transitions Group, a premier full-service dental practice management company serving dental professionals at all stages of their career, from graduation to retirement. Lisa is an eternal student of learning and growth and a natural change agent that can adapt and reinvent as needed. She's a published author and a sought-after international keynote speaker and trainer. Lisa has been on the Dentistry Today's top 100 speakers list for over 10 years. Her proven practice management methods and strategies have built, grown, and transitioned thousands of dental professionals over the past 20 years. First, a little bit about CDSPI. We provide expert advice in tailored insurance and investment solutions exclusively to the dental community. We've been advancing financial wellness of dentists for over 60 years. During that time, we've been able to help thousands of dentists and their families reach their financial goals and protect them with insurance plans. CDSPI is also endorsed by your provincial dental association, and our services are provided as a benefit of your membership. CDSPI is fundamentally different from all of the other insurance and investment providers out there in 3 very important ways. First of all, we're a not-for-profit organization. Since we're not obliged to meet the demands of shareholders, we can provide products and services that are focused solely on your needs. Both investments and insurance services, for both of them, it's important to note that the advice we offer is completely unbiased. I don't work on a commission, and neither do any of my colleagues. So there's no advantage to us to suggest a particular fund or insurance policy. We understand your business. We know the challenges you face and the best ways to protect and grow your wealth. So the second thing that we do is we exist solely to serve the dental community. The fact is that we work exclusively with dentists, and that ensures that we are hyper-focused on your needs. For example, our insurance plans for malpractice or office protection, long-term disability, they're all designed with dentist-specific features. Third, we're accountable to you. Our board of directors is selected and voted in by the provincial dental associations, and they hold us accountable for delivering value-added programs to you. Beyond providing financial services, we are passionate about giving back to the dental community. It's by giving back through things like the Members Assistance Program, known as MAP. MAP, for example, offers short-term counseling, referrals, information, and support for your physical, emotional, and mental well-being. It's available to you, your family, and your dental office staff. It's completely free, completely confidential. It's available 365 days a year, 24/7. So it's really important that you think of CDSPI as a trusted partner. It's just that simple. Our not-for-profit status ensures that our interests are in line with yours. Simply connect with us and we will bring all of our experience and expertise to help you navigate these uncertain times and build financial security for you and your family. Okay, so today's topic is pretty straightforward. We want to show you how you can make more via your practice and in turn keep more by following various different financial planning strategies. Lisa and I are going to focus solely on 5 key points that we speak to our clients about all the time. But believe me, there are even more things that we can do to make your life easier. With that, I'd like to now ask Lisa to begin with her key strategies and tactics to help each of you earn more within your practice. Take it away, Lisa.
Thank you, Shane, for that wonderful introduction. It's been a rewarding and amazing 20 years serving dentistry, and especially through the last, as we speak today, 400 days of living through COVID survival and supporting Canadian dentists with rebuilding from the shutdown and the shock of dentistry not being essential all the way through to today where we rebuild. I can say I'm extremely proud of dentistry and the future is bright. We've shown that we're not only pandemic proof, but we're extremely resilient. And if we look at where the next few years are going to go with dentistry and it being a major part of healthcare, and I think a lot of patients missed dentistry when it was closed down, and there's definitely a deep and enhanced value of the perception of oral health care services and where dentist and dentistry fits into a patient's overall plan. You can see here that regardless of what's going to happen with the economy, healthcare is going to maintain as top spending, and especially in dentistry, with far exceeding any other industries through consumer reports, economic studies, and professional information being collected right now. Dentistry is predicted in the next few years to by 2025. It's at a current spending today of $13 billion a year in Canada, and it's going to projected to go in 2025 to 19 billion. So we keep going. We've made it through many other lockdowns and decisions by the government, and they definitely value dentistry in helping get us through one of the toughest times I can think of in my half a century on Earth. Good news, we're resilient. The challenge is we're not resilient by accident, and the practices that are exceeding their pre-COVID productivity in earning more are the practices that had a plan, adapted to change, and focused on some key elements to not only rebuild. We can't necessarily get back lost production or revenue, but we definitely can show that we can be better than we were before COVID and the pandemic hit our profession. What are some of the macro trends today? I think let's focus now. We talked about the past, we all lived it. Now talk about macro trends and what's really going on in 2020 in dentistry in current times. We know by the studies that we are going to increase in spending with an increase in services and patients going to the dentist. But we also have the average age of a retiring dentist increased to 72 years of age, and that's significantly higher than it's been in the past few decades. And that's why I look forward to you hearing from Shane, because a lot of dentists tell me that retirement is something that they wish they would have planned for better so they could maintain their same quality of life when they're not the same quality of life that they had when they were an owner of a dental practice. With market values are at the highest of dental practices they've ever been in history, and we have an oversaturation of dentists. Basically every major urban center in the country is saturated with dentists. However, the competition is real, and I think the practices that are sustaining and growing and surviving are the practices that not only treat the patient and the diseases of the oral health, but also focus on their performance, their quantitative, their qualitative metrics and performance indicators of how they can be their best. A massive growth in digital technology, software applications, and automation. A lot of the systems that transitions that we've coached and taught for decades are now being made much more efficient, moving from manual to automation with dashboards, analytic tools, and knowing your business and planning your future with goals is not as complicated and as subjective as it used to be. Dental practice management playbook, your systems, your organization, how you run each day in the health of the patient, the health of the team, and the health of the business is the conglomerate of three very big impacts that a playbook provides. There's not many winning teams or successful businesses that have growth that don't have an operational playbook of predictability of how they want to have a better future than their past. Also, dentistry is a human capital business. 80% of its value and its success is in the goodwill, but also the mouth body connection. And never before have we had so much science and research to show the value of how the oral health is part of overall health, but also is a major player in also dealing with COVID and with dealing with the staying free from disease. The mouth body connection is real. And when we look at what the pain points are, those are some of the macro trends for you to be aware of. But the pain points, this is from working with hundreds and hundreds of not only dental practices, but dental professionals through COVID and prior to that. But a lot of dentists are sharing the pandemic exhausted them, and maybe they want to transition out of ownership or they want to transition into retirement, but they're wondering what is the wealth plan, and it wasn't defined. So many young dentists ask me, what are some things I can do now that you find a lot of veteran or mature dentists wish they did? And one of the top three answers comes back the same, is plan now for a future. It might not be retirement, but plan for how you're going to transition out of dentistry your way, with not only timing, but with some of the tools Shane talks about that are available to you. Pandemic rebuilding of your productivity when it comes to looking at your top line, asking yourself, are you producing the same or more than you did before COVID and the pandemic hit? And how is it that you're doing that? It's very important when you're thinking of change or you're looking at a better future than your past. If something is working, you want to do more of it. If something is not working, you want to create changes or different solutions to impact the performance and to make it work. We all know the definition of insanity is doing the same thing over and over and expecting a different result. The third rule of change is, if you don't know if it's working or not, denial and sweeping it under our carpet is not the answer. We want to know what we have, set goals for how it can be better, and create a strategy of how to get there with not only the owner, the management model, but also the dental team and with your patient base. Maintaining lifestyle. Dentists have a very good lifestyle. It's how do you continue your lifestyle and what is going to be your retirement paycheck? What is the mixture of that? And that's why it's been fascinating to work with CDSPI to understand all the tools they have as a very unbiased nonprofit advisement group and experts that can help you do that planning now, regardless of the stage of career that you're at. There is definitely some fear, not only from the funders or the lenders, economists, and what you hear in the news, but we do need to keep our ears and eyes open for unemployment rates with our patient bases and the loss of dental benefits. Of the $13 billion spent in Canada a year, 51% of that comes from employers supplied dental benefits. So again, we want to stay alert, we want to stay aware, we want to know what the positive parts of dentistry are, but we also want to know what could get in our way as an obstacle that doesn't have to stop us on our journey. When I talk about metrics, you'll hear me use the word metrics, and metrics are a quantitative measurement for your business that deal with percentages, numbers, dollars, all the different things that we can measure. The qualitative metrics involve the people, the team, the patients, their decision making, and how we enhance not only the patient experience, but how we keep the morale activated and ignited with our dental teams. We cannot do this alone. We cannot do this alone. Together, we need everybody. And I can tell you, dentistry's been through probably more change in the last year than they have been in the previous 20 with all of the different protocols. And as much as we were a very safe place with infection control and preventing disease transmission, it's no longer a day where you come in 2 minutes before a patient and you just wing it, hoping to get through till 5 o'clock, and everyone goes home fulfilled and happy. So I'm going to talk about the metrics, but also what are some 5 key areas that practices that are successful today and are thriving regardless of external forces, what they are focusing on, with some dashboards and some analytics, more for you to have some tools to go back and look at not only your practice management system, but what other softwares can you add that will tell you this on a regular basis. You look at what's inside the mind of a dentist. A dentist wears so many hats. It's a very rare business model or leadership model where the owner and the key provider is in a 10 by 10 room producing 60 to 70 cents on every dollar with 1 to 3 interruptions an hour. And we all know in dentistry, one of the biggest reasons for loss is white space in our schedule when we're able to offer when we need to have patients in the chair. But also, how do we stay profitable? It's going to be more challenging than ever for the solo practitioner and the smaller practices to stay profitable, mainly because of the increase in PPE needs, the thousands and thousands of dollars that I watch dentistry do in construction, renovations, air qualifiers, air quality purifiers. So I think the key is, how do you simplify? In order to multiply, we must simplify and we must manage the overwhelm. 9 out of 10 dentists 25 years later still tell me they just want to be a dentist. And that's exactly what dental school teaches them. Then they're put in a business with the people, the leadership, the patient communication, and all the different things that go with what needs to happen in the 5 key engines. Every dental practice, regardless of the uniqueness, it occurs with 5 key engines. I use an acronym called CREPT. CREPT helps remember the names of these 5 engines: capacity, revenue, expense, patient, and team. And I'm not going to go through all of these 5 engines because in the essence of time, but if you were to take these 5 different areas and rate yourself and your practice on a scale of 1 to 10, and some of the metrics I'm going to talk about, know where you are, where you want to be, and then you bring everything together to close the gap with these 5 areas, these 5 key components of every single dental practice in Canada. We know the inevitable goal of when dentistry is a win. And when we have 90% of our day with a patient, a provider, and an operatory all functioning in harmony with more green stress than less stress, that's a good, solid, fulfilling day in dentistry. So when you look at, are you functioning at 95%? I don't say 100% because perfect doesn't exist. And if you're striving for perfect, you know what happens. Once you hit perfect, you find a new perfect. So we're striving here for progress. And if you asked yourself or said to yourself every day on the way to work, what could I do today to be 1% better than yesterday? You joined with the dental team and they ask the same thing, the compound effect of that will help you increase and not only make more, but with what Shane's talking about, keep more and being able to take your earnings today to provide you and support you into the longevity of your life so you can leave dentistry, transfer ownership dentistry and stay, or you can do it your way. Whether it's retirement, whether it's becoming an associate, whether it's getting rid of the headaches, whatever your choices are, it does require a strategy, but we can't have a strategy without a successful dental practice with a successful dental practice with these 3 key elements. So here's what the top 1% of the practices that are making it through whatever tough times. Tough times don't last, tough people do. So we're talking about loyalty, variety, growth, frequency, and acceptance. And if you thought of these 5 building blocks or these 5 key areas, they're really relevant in all stages of a dental practice's career, from startup to starting from zero to purchasing another practice to being an associate to functioning through decades and decades of general dentistry. How? So let's begin with loyalty. 80% of dentistry's 80% of dentistry's value is based on goodwill. And goodwill is, what is the loyalty, the number of patients, and who is it that you service of people who see you as their dentist? The average dentist working 32 hours, 4 or 5 days a week, needs at least 1,600 to 1,800 active patients that have been in their practice in the past 2 years to be considered sustainable and growth opportunities. So when you look at what is it about your active patients, an active patient is someone that's been considered to visit your practice in the last 2 years, regardless of the service. And you look at what is not only how many, not only how many active patients do you have, but what is the demographics? What is their genders? What is their generational tendencies based on their age? What is their insurance status? There today, with technology and with software programs, a lot of the information you need to know about your active patients is readily available. It's just no one really looks at them. So you know who you go back to who brung you. There was a vast array of active patients that were absolutely taken out of the schedule when the shutdown happened. And I highly encourage you to assess how many active patients you have and how many of those patients are not scheduled in your practice today, because we want to have 80% of our active patients scheduled at all times in our practice through restorative or through hygiene in regards to the general practice. You know, it's interesting. The patient comes first, everything else can wait. Is the patient always right? No, because if they're always right, then we would be always wrong. But the patient is always valid. And the Canadian Dental Association did an amazing patients survey a couple of years ago on what drives patient satisfaction in dentistry. And the satisfaction formula really is patient satisfaction equals their perceptions of you minus their expectations of how you treat them. What came up was very interesting, is this was a Canadian dental patient's perception of a good dentist. Good dentist, good dental practice, they all go hand in hand because we know the dentist can't do it alone, and the team is very influential with your patients. But what's interesting here, you'll notice there's some key commonalities that came out of what does a patient perceive, but they want to perceive that you're confident and empathetic, that you have compassion for people by how you behave, that you know them as a person. The worst thing you can do is when a patient arrives is for someone to say, "Who are you and what brings you here today?" They expect you to know them not only by their name, but of what it means, what their life is like, and is to have a personal relationship with them before you earn the right to work in one of their top 2 most intimate zones of their body. Interesting here, they want honesty, and I don't think that's necessarily because they think that we lie in dentistry or don't tell the truth, but I think honesty means they want to know what is their conditions today in their oral health, what are the best solutions to treat them, and not hold back because of prejudgment or because of things that you believe as a provider they might not want to hear. Respect. Respect is from a Latin word to relook. They want to be respected each time they come into the practice, meaning a no last 6 month visit doesn't mean it's a no today, and you show by respect by revisiting with them. They want to know that you're thorough, that you take time, and that you do document. So I found this very interesting. You know, a lot of dental professionals so much more, and they said that before the pandemic, but I don't look at it as so much more as demanding. They're more sophisticated and they're more vocal about what it is they expect and what it is they want. And if you look at what Canadian patients told us they expect from their dentist and their dental practice, at the top of the list is friendliness. And a lot of the reference to friendliness was, we would like to be greeted when we arrive in an environment with a smile with someone who seems to like their job. Well, wouldn't it be interesting? There's not many interesting there's not many places that you go that you want to walk into through a door and not be greeted and acknowledged for your presence. And there's that key word again that's very driven to Canadian demographics of the humans. They want empathy. And empathy is they want you to take the time to understand what their life is like in their shoes before you tell them what they need to do, they have to do, and they should do. This comes from a tool of communication of ask before you tell. So many times in dentistry, we invite the patient back, we lay them flat on their back, we ask them if they've had any changes in their medical history, and we just start what I call showing up and throwing up all of our brilliance of a code language in a group of words that are jargon in our dental profession that they really don't understand. Another one here that's very important to point out is a fair fee. And a lot of people ask me about that. And upon doing further research, what they mean by a fair fee isn't that you give them a discount or you give them a deal. Because when Canadians were asked about a $500 crown or a $5,000 crown, the price didn't matter or the cost, they thought it was all expensive. What this is really referring to is they want to know what the investment is and for it not to change and to be able to have it very clearly spelt out of what the treatment plan is going to cost them without any surprises or after the fact added costs. Our next building block is to increase the variety of the procedures that you're providing in hygiene, restorative, and possible elective smile design services with the demand of patients wanting to look their best with their smile and their teeth. You increase the variety of procedures through your diagnostic process, through your treatment planning, and your confidence in being able to deliver that. And also having a solid hygiene program and perio program to be able to detect and diagnose possible early signs of periodontal disease, which is the number one cause of premature tooth loss. If you look at what is the variety of procedures and the different types, the variety of procedures you do does contribute to your top line productivity, but the type of procedures also does too. And the biggest jump a dental practice takes is when they move from tooth dentistry to quadrant dentistry. And that just means that's not making up more things to do. That's doing longer appointments, more dentistry per appointment as opposed to small increments and doing one tooth every year based on their dental benefits. I can say one good thing about COVID and how it modified our schedule is we no longer can put shorter appointments in there. We need to engage the patient in asking them if they'd like to have more done per appointment as opposed to coming back with the frequency due to the screenings and all the extra work. If you look on the right side of this bar, this is talking about what we call the major dentistry, the high-end dentistry. And it's not that you have to do these all, it's just looking at increasing the variety of procedures, and the type of procedures increases your dollar per hour and will cause growth in your practice based on your speed and skill of how you deliver those. The next block is increasing the frequency in which your patients visit your practice. There is so many active patients right now in the dental practice that are not attached in the schedule, and you need to this is a never ending process. This is the recall calls, this is who's fallen out of care, this is your cancellations, your no shows, this is making sure everyone has a pre-scheduled visit in hygiene and restorative before they leave the operatory. There are many softwares out there right now with Zebra and Recall Max and Care Crew that can all help you monitor of your active patients, how frequent are they coming to the dental practice, and frequency cannot depend on an insurance plan developed by an insurance company to provide financial assistance for basic and preventive care. So it's how do you encourage the patient to honor the frequency or interval that's best for their oral health as opposed to what they have benefits for on an insurance plan that wasn't designed to pay for it all. It was never designed to pay for all dental needs. It was designed to get patients to the practice to be able to be educated so that they could say yes with a smile on their face and they could honor your time. your confirmation, your reminders, and I can say that's enhanced and improved significantly in dentistry because we cannot have a patient arrive in our practice during COVID without them doing many things before the visit. If you took what's going on with your due and late, have a look at how many patients were due as of yesterday to come into your practice. And this takes a dedicated, uninterrupted systems approach with your administrative team to constantly keep your patients in flow. When they're not attached to your practice, you do take a risk. They will be tempted to go to a different dental practice that reaches out to them either through marketing and online footprint or through word of mouth. When we look at the hygiene retention, and you look at this is a snapshot from a Zebra profile we used with a company named Patient News that can go into the software and can actually tell you these metrics very, very easily without looking at any patient private confidential information. And we see here, this is an example. This practice has an average of 1.2 patients visits per year is their interval is 1.2. And if you think about it, dentistry's been doing at least every 6 months for decades. And and this is a practice that is falling behind in the frequency of what's best for the oral health and and also what's the minimum time that a patient needs professional intervention to be able to come through your hygiene department. You look here, periodontal utilization. Periodontal utilization, a benchmark for a well-run perio program is 7 to 10% of your hygiene patients are in some form of periodontal treatment, whether it's active therapy or maintenance. And when you look at periodontal utilization are your patients coming in with active infection being treated like they're a healthy patient for a cleaning? They just take longer. You look here, this practice shows, the patients that are overdue, past due patients, there's 307 patients that are due today for their hygiene. That could not only fill white space, but also 80% of the dentist restorative schedule comes out of patients of record and hygiene. The rest comes from new patients and emergency patients. So don't let your active patients fall through the cracks. That is one of the biggest losses in dentistry. And have an outbound proactive approach using automation. I can tell you when I talk to admin teams of what they like to do or don't like to do the most, the two things they don't like the most are collection calls and recall calls. And there's very valid reasons for that. Those are reactive systems and processes of chasing and harassing and trying to get in contact in this day and age with all different methods of communication to engage the patient in scheduling their visits on a frequency that's best for them, whether it's 3 month, 4 month, 6 month, 9 month, but a year. Having an average interval for 2,000 patients of a year, there's a lot of opportunity loss in hygiene and also in the restorative for exam opportunities. You look at this particular practice here, um, you know, figuring out your demand for hygiene hours. And I'm glad this is being recorded so that you have reference to come back to this. If you took 80% of your active patients that were needed to come at least twice a year for 1 hour, that's what we call your bare minimum demand for hygiene hours. So a lot of practices have hygiene, but do you have enough hours to treat 80% of your active patients based on their frequency so that you have an opportunity to let them know what's changed and what's new in dentistry to have acceptance to a variety of procedures. And if you look here, this practice, it's a large practice. They have 4,900 proven, truly active patients, and make sure you get some valid data on that because some practice management systems aren't coming out with accurate numbers on that, and there's different ways to cross-reference. But if you look at this, just walks you through a formula you can use in your own practice for figuring out your active patients. 80% of them come 2 visits a year, we'll say for 1 hour. This is a very basic formula for you to know what's the minimum hours you should have in hygiene. Or do you have a lot of white space because you have too many hours for the active patients that your practice does have? Now we go to increasing the growth of your new patients. Dentistry is not new to always wanting new patients, and we do need new patients. But I'm going to tell you a couple things is new patients don't find you if you in this today in current times if you do not have a strong digital presence. I call it your online profile, your online digital footprint through your website. Still 30% of dentists don't have websites. Websites is no longer an option. It's absolutely required for every age group and generation from 5 years old to 80 is on the internet. The usage of the internet in our older generation traditionalist population has doubled in the last 3 years. So don't think it's just for young people. Everyone's using the internet, and whenever someone refers you as a dental practice, the patient they're referring to goes to their smartphone and Googles you. So I challenge you after this presentation, Google yourself and see what comes up. Look at your website. Websites are great to have, but websites you can't set it and forget it in this day and age. You have to keep it active so it rises to the top of the Google search engine. Think of the Google search engine as the new telephone book for the internet, except you don't have to change your name to Dr. Apple to get at the top of the yellow pages anymore. What you have to do is have activity online and working with marketing companies. There's so many marketing companies to help you in dentistry maximize your online presence so that you can gain the new patients that you deserve. Also, social media. Social media is a big part of what's driving new patients. It's also a way to communicate with your patients of record, but the days of telephone harassment with 50 outbound calls an hour, trying to get a human to answer a landline that 50% of them don't have anymore, is no longer the mode of how we connect and communicate. But it's no longer the mode of how we attract new patients. I'm not saying that a brochure might not be a bad thing, or you might not choose to do a direct mail campaign to an area that you've marketed, especially if you're starting up. But the internet is where patients are coming from, especially new ones, and they want to see if you're unique, and they want to see what it is that you'll do different based on how you show up. Make sure also with your marketing, there's a lot of trees out on the internet that pick your practice up without you knowing, that often get your information wrong. I've seen wrong addresses, wrong phone numbers. So have your marketing company check where your practice is in the directories. There's 12 to 15 directories, RateMD, Angie's List, all those different things. For travel, there's TripAdvisors. Though they don't have to ask you to bring your practice onto their directory. So you want to make sure if they're going to do that and people find you a different way, that they're going to do it, they have your accurate information. Also, we're going to talk about patient communication changes, and how you communicate with them electronically. But when it comes to the new patients and your social media campaigns, you can't just be on the internet and not do anything. So this can be daunting to a lot of practices, but there's a lot of things you can outsource. If you don't have anyone in your practice that wants to do Facebook posts, or you can work with people that will create those for you. I can tell you, Facebook and Instagram probably right now are the top two social media posts. I haven't found Snapchat to be a big thing, mainly because those of us at a certain age have to get our glasses, and by the time you do, you can't see what the message was. There might be some upcoming things with TikTok, with videos. They can be very funny, but right now, Facebook and Instagram. We have worked with Twitter for a while, and we're not seeing that Twitter is as popular with helping drive necessarily new patients, or with communicating with your patients of record. When we talk about tracking your new patients, it's easy to say you've got 50 new patients a month, but a lot of practices aren't assessing whether they returned for their second visit and how many lost patients are going out the back door. So if you look in this scenario here, this practice has 848 patients last year coming in, but they lost 1,021. So it's 10 times more expensive in time, energy, and money to gain a new patient than it is to retain an active patient. So as much as you're working on marketing of the new patients, because that is your growth, you want to make sure that your patients of record aren't going out the back door. Otherwise, those efforts become a moot point, and they become you have a net loss of what's going on in your practice. And remember, a patient is considered lost if they have not been into your practice for 2 years. Lost doesn't mean gone forever. Lost just means they're lost from remembering you over the last 24 months. And why not give them a touch base and reach out to them to make sure to see if it's just they've changed dentist, or they just haven't had dental care in those many years. But measure your gain versus your loss, and that's your true growth factor here. The next part to focus on is increasing the acceptance and focusing on your outstanding dentistry. You know, how many of you have charts that say, don't ever mention the crown again? Patient doesn't want to hear anything about implants. I want you to look at that as patients are dynamic. They're not static. Just because they had that response on one visit doesn't mean that's going to be the same opinion they have a year later. So outstanding dentistry is what I call cabinet millionaire. The average dental practice, solo practice in Canada with 1,800 patients has minimum $500,000 in undone dentistry in the charts that hasn't been completed. So what is the definition truly of acceptance? Is case acceptance isn't sales techniques, it's not force, it's not lack of informed consent, it's not, tricks and manipulation. It's how do you diagnose the conditions in the mouth of the patient so they know in their health of their gums, their teeth, and their smile, what is the best treatment plan solutions to treat their conditions? And then how do we make that affordable so that they can say yes, maximizing whatever benefits they have and finding a way for them to make a financial agreement or arrangement for the remainder. Monitoring your case acceptance over the years has been the toughest thing to do through your practice management system. In fact, I have not found a practice management system today in this country that accurately tracks case acceptance without an add-on software to be able to go in and collect treatment plannings. We know that dentistry is moving a lot more to paperless. I think the paperless dental practices have doubled, especially through COVID, because of a variety of reasons. And I say, actually, I shouldn't say paperless. I say chartless. When you're on chartless, your computer system is where all treatment plans are entered and then completed from that. And that's where you want to track your case acceptance. The average case acceptance in dentistry for general procedures is 60 to 65%. And that's for procedures under the amount of $2,000. When you get into the large cosmetic cases, and rehabilitative condylar movement, full mouth reconstruction, the case acceptance tends to go down to 35 to 40%. But remember, that which is tracked and measured will improve by awareness alone. Then you can create one of the greatest or most successful things we've implemented over the last few decades is the use of a treatment coordinator. And having a place outside of the clinical area where a patient can discuss their treatment plan and their private financial arrangements without being in the middle of a waiting room has driven double, tripled case acceptance in many practices. If you're doing this manually, it's a very simple process of tracking what dentistry was presented each day, what portion of that dentistry was accepted. And remember, to be accepted, there must be a financial agreement and they must have scheduled an appointment before they left. So what is your case acceptance? Once you know what it is, then as a dental team, you come together and you set 5% increase in goals each month until you've reached that goal. The thing about goals in dentistry is once you reach a goal for 3 consecutive months, it's time to increase the goal because then it becomes your successful history. 3% of the population that write their goals in this country contribute to 97% of the wealth. Why don't we write more goals? We've been teaching dentistry goal writing for 20 years, and the practices that take the time to know what they want, to write the goal and get and work towards them as a team, have had a minimum of 10 to 15% increase every single year except 2020 because we weren't working. So know your case acceptance. Know what is it that you're diagnosing a month. Your case acceptance this month can drive the contribution to your productivity goals for the dentist next month. And we find this is the most overlooked metric in dentistry because it's not a turnkey automated thing. This is an external software called Zebra that went in to look at this practice's case acceptance trends over the past year. And again, when you know where you look at where you've been, you know where you are, you can work to be 1% better. If you just show up every day to dentistry 3 minutes before your patients and wing it with filling white space, that's where burnout comes from. That's where low morale, that's where patient experience is jeopardized. Plan for your day, plan for your week, set goals for your month. Your year will turn out to have a growth that maybe you didn't imagine. So you look at this example. This shows in a particular practice that there's 77. This is actually a smaller practice, a startup. There's 77 new patients they saw in the last 3 months with $50,000 of dentistry that was not completed. Okay, so again, it's knowing what do you have every day. Do you look at you do your daily preparation and look at who's coming into the practice and do they have previously diagnosed dentistry that we have a moral, ethical responsibility to revisit with them to see if they're ready. And if the patient isn't ready, then we continue to follow up on their outstanding dentistry because a patient says yes when they're ready, not when we're ready. And even though they've got the big red mark, don't ever mention it again. You let them know that it is your role to touch base with them if they would like to revisit previously diagnosed treatment plan solutions for dentistry that they have not been able to say yes to as of yet. Diagnostic opportunities really is a measurement through this software of how many examinations were done. This happens to be a historical in the past year. There was 1,444 opportunities for a dentist to diagnose, is the only one that can diagnose, and treatment plan possible future services. And what does that really mean, knowing that? That just shows you this is how many times you had a chance to communicate and diagnose, treatment plan, and then present the dentistry for the patient to have a chance to say yes. Please do not use your own filters and judgments and stories to prejudge the patient. The belief system in today's dentistry today is you believe every patient you serve has the right to know what's going on inside of their mouth, what's the best you can offer to correct that condition for the quality of their life, aesthetics, appearance, and function, so they can make the decision that's right for them. A no today is a yes tomorrow if you stay the course with communicating everything possible that they can choose. Patients want to be in control of their decisions. Remember, that was one of their expectations. They don't want to be taken away of the decisions they make because of your perceptions of what you think they may or may not do. So look at your outstanding dentistry every day. Look at the patients who have outstanding dentistry, and then choose the provider that's going to revisit with a conversation, not a 30-minute video, with a conversation of asking before you tell them and find out where they're at. Our next metric is collections. This is collecting what you produce. Canadian dentistry as a whole has a pretty high collection rate. However, some practices don't track their adjustments. So if I produce $10, give away $3 in discounts, and only collect that 70%, my collections is going to be a false number. I can tell you 60% of dentists in Canada have been or are being embezzled at some stage of their career. That is way too high. Working with the embezzlement specialists and people looking for fraud is people ask me, why is a dentist so prone to being embezzled? Is because they don't know their business. They just wanted to be a dentist and they don't know what's going on in their business while they're providing services to patients. So tracking adjustments, your greatest way to prone yourself, one of the greatest ways is to track the adjustments. And an adjustment is a process of tracking anything off the usual fee that you charge that is not going to be collected and looking at that at the end of each month. Also, doctors, please look at your day sheets. I don't care if they put them in your purse, your shoes, the windshield wiper of your car before you leave the practice. Looking at the day end of what your practice did also helps correct insurance filing errors, wrong procedure codes, because we're human and a lot of human errors and a lot of humans are entering in what was done in the day. Take responsibility for your business, be an entrepreneur, and don't fight what's right in front of you because there's so many tools, automation, and experts and advisors to help you maximize your dental practice and know what's going on with your collections. Another word for this is deposits. So when you look at the accounts receivable, an assignment practice should not be operating at more than 4 to 6 weeks of production in accounts receivable. Accounts receivable has two facets. Accounts receivable has what's the total dollar amount owing and what is the aging of it. You want less than 5% of your accounts receivable in over 90. The longer you wait to collect a dollar owed to you today dissipates and reduces the value of that currency in the future. And what did I say to you? Admin teams do not like to do the least is collection calls. What are your financial arrangements? How do you collect? Do you collect over the counter? Do you accept some insurance on assignment and at all? Do you let the patient receive the insurance check or give them 30 days to wait till their credit card bill is due? We will be in dentistry going to chairside and auto pay um, through different devices. It's coming. And I think look at your accounts receivable. This is money already owed to you on costs you've already spent and procedures you've already delivered. Make sure that it's managed. If you're a non-assignment practice, you basically or theoretically wouldn't have any accounts receivable because you do collect at time of service. This is, of course, different if you've got some kind of financial arrangements for Invisalign or like ortho practices that do monthly payments interest-free over long periods of time. Or if your accounts receivable is very out of control, you might want to consider partnering with a third-party financing company. They can work with the patient with no recourse to you, with providing you with a tablet on site for the patient to fill in 3 questions to see if they can get approved to outsource the financing of their dentistry. So collect what you produce. We can produce as many millions of dollars as we want, but if we don't get a deposit or paid for it, our business is not going to be viable. Okay, so in summary of what are the summary of the key metrics? If you looked at nothing else in your practice, what is it that I would say you need to absolutely know to create a strategy and a plan to know what you're earning? You can stay profitable so that you can not only put away money for your future and for whatever that might be to transition your way, but also to show growth year over year. When I say practice values are the highest they've ever been in history, what I mean by that is we have we're oversaturated with 1,200 dentists coming into the country a year, not enough buyers with delayed retirement of a dentist, and also with the inception of corporate dentistry. And corporate dentistry, liking dentistry because dentistry, when well run and operationally managed, can be extremely profitable. So whatever model that you're in, whatever type, our goal at transition has always been to support the solo practitioner, the cottage industry practices around the country. If you choose not to be involved in corporate, but even corporate dentistry, corporate dentistry looks at metrics all the time. That's not a bad thing. They have to, because they've got to be accountable. You as a business owner need to look at these so that you can know how you're doing, plan your future, and be able to maximize the value of your entire career when it comes time for you to exit and transitions out. So let's go through these. Active patients. Know your active patients. Any human that's been into your practice in the last 2 years. Then look at, are they scheduled? Are they in your schedule, or do they need to be reactivated? Your new patient growth factor, how many new patients are coming in per month, and making sure that they're returning for their second visit. Productivity breakdown, this is productivity not only of your total production, but of your department production and restorative, your production of hygiene, and usually, ideally, that's a 60-40 split in a well-run dental practice. You want to know, what is the patient demographics, not only generationally, so you can adapt your case acceptance in different ways that they like to pay and how they like to be treated, but also, do you have your patients on electronic communication through emailing, texting? The practices that didn't have COVID cause as much stress were the ones that could send out global messages through emailing, texting, and their social media campaigns, as opposed to poor Sally, who had to sit there and call 120 people one by one because there was no other way to let them know how to take them out of the schedule or to reschedule their visit. Hygiene retention is what percentage of your patients are honoring the intervals that you recommend based on their oral health care. How many patients on 3 months? How many patients on 6? How many on 9? And what is your periodontal program compliance rate? Are they honoring those intervals outside of the limitations of dental benefits? Knowing exactly what you collect each month, that's what goes in the bank through deposits, and does that meet the break even of what it costs to run your practice from a cash flow perspective? Know your case acceptance. How much dentistry is being diagnosed each day, each week, each month, and what percentage of that is being accepted with patients saying yes with a smile on their face, agreeing and scheduling their next visit with you. And also looking at what dentistry is sitting in your charts that's there, of people that already are loyal, they already know you, and how are you revisiting that on each visit as a moral and ethical obligation to let them know what's best. I do not want you to become a cabinet millionaire, because that is where your dentistry and your diagnosis is sitting. If you had one more win a day of a patient say yes, that is one more win for your 1% better. Shane, take it away. We're going to help dentists be profitable. They're going to think about their future and everything that they have sitting in front of them that they can put aside to maintain their quality of life and their lifestyle, support all their dependents however they see fit. And we appreciate everything CDSPI does for dentistry.
Thank you, Lisa. That's a lot of great information there. As promised, I'm now going to touch on just 5 financial planning strategies that are going to help you, again, keep more of the hard-earned income that you've made. There are a number of questions, though, that we ask ourselves when we are thinking about retirement. And I can tell you from my decades of experience that so very few people really know what to strive for when it comes to retirement. Most people who I initially speak to don't have a sense at all of what their income in retirement should be, or what they'll even want for that matter. Even the age at which they plan on retiring is regularly a fluid date. All of this gets affected, unfortunately, by life's little curveballs that get thrown at each of us. We need to account for so many things, from our own health and well-being to our family members as well. Thus, there's a lot to think about when it comes to your retirement finances. Ergo, it's really important to have a solid financial plan, something whereby we can look at the strategies available to all of us to ensure that we utilize them to the fullest and to help achieve your goals and protect what's important to you. All right, so let's dive right in here. I'm going to make some assumptions for illustrative purposes. First, we're going to assume that you've incorporated, since most dentists are. We're going to assume that as a younger to middle-aged dentist, you didn't bother to get your spouse added on as a shareholder due to the income splitting rules change of a few years ago. From a tax planning standpoint, we're going to assume that it's basically summed up with, yeah, I pay my corporate taxes on time. We're going to also assume that you're paying yourself via salary and dividends, and that you have one wonderful adult child who's no longer a huge strain on you, financially speaking. Congrats on that. And you're unfortunately not income splitting with anyone at this time. We're also going to assume that you've been a good saver over the past couple of decades. Your RSP, as an example, is at around $150,000. And corporately, you've even managed to accumulate $1 million inside your corporation. Your practice does well, has revenues of about $1 million a year. And that salary that I was saying you were paying yourself, it was $150,000 a year. And you were going to be taking $60,000 a year in dividends, at the same time saving $60,000 a year in inside your corporation. Okay, so now let's start looking at those 5 financial planning strategies that I was talking about. So at the end of the presentation, I'm going to show you how much of a difference these 5 strategies can make. The first strategy that I would recommend is that everyone participates in having your spouse added as a non-voting shareholder. In this instance, you're not required to provide them with dividends each year, although in some cases you still can income split with your spouse. The second strategy we're going to look at is to continue to save inside your corporation. I know it's frustrating if your passive income exceeds that $50,000 per year threshold, and it therefore increases your active business tax rate. However, that tax rate is still well below the current personal dividend tax rate. IPPs, the third option, they weren't historically as optimal as they are right now. There have been some recent changes to how they're dealt with upon winding them up that have made them really a super RSP. Another strategy that we're working with is called a preferred gain strip or surplus stripping. It provides you with a very big tax break when you do it. So that's a really key one. And then the fifth one is, last but not least, is a plan in which we can kill 2 birds with 1 stone. And that is taking out permanent life insurance, such as universal life. In this instance, you can cover your family in the earlier working years, and at the same time, utilize this product in the future to be able to get funds out of your corporation at a better rate than what your current tax rate is. All right, so let's dive into that lifetime capital gains exemption that I was referring to. So lifetime capital gains exemption only exists for dentists who are incorporated. At its basics, it is a way for you to exempt yourself from paying taxes on some or potentially all of the growth that your practice has achieved while you've owned it. The amount itself goes up every single year, and it's currently at $892,218. Any shareholder can participate in the lifetime capital gains exemption. And despite not receiving dividends from an income splitting, dividends like you have done in the past, it is still a very viable strategy to help save tax dollars when you sell. In this instance, if you sold the practice and the gain was $900,000, the non-lifetime capital exemption way of operating would result in taxes payable of about $225,000. Conversely, if you took advantage of the lifetime capital gains exemption, the taxes on a gain of $900,000 would be closer to $4,000. That's a really, really big difference. But what if your gain was even larger than $900,000? What if you built your practice from the ground up and that gain was going to be closer to $2 million? Now your projected taxes payable will be closer to $500,000 in a non-lifetime capital gains exemption manner. Unless again you're incorporated, and again, unless you have your spouse as a shareholder, in which case you would save a bundle on taxes. And I'm going to show you specifically how much later on in this presentation. Okay, corporate savings versus personal savings. So again, I totally appreciate why someone would be apprehensive about their corporate savings exceeding that $50,000 annual growth threshold, because yes, it will impact a very awesome active business tax rate. However, when you look at the tax rates for income on a personal basis or dividend basis or any other basis, really, yeah, you can see that that small business tax rate has a long way to go before it gets up to that same level there. And again, don't forget, the more that you've got saved inside your corporation, the greater amount you can apply towards investments, or for that matter, funding life insurance inside a holding company, as an example. Okay, individual pension plans versus RSPs. Now, IPPs, they're not new, but the rules have changed about how they're effective when they're wound down, and to which they become a much more attractive option to those who were already saving inside an RSP. For one, you can play catch up by contributing additional past service contributions that haven't been contributed previously, thus enabling higher contributions for you. The plans act a lot like a defined contribution plan in so much as you get to control how the investments are made. Importantly, these investments are also offer you creditor protection, which is important as a business owner. Also, if your corporation doesn't have the funds available to make those contributions, you can borrow, and that the cost of borrowing is tax deductible to your corporation. You can't do that with an RSP loan. That said, they're not perfect. They do come with additional costs from the actuaries, and the funds themselves, they're not available until retirement, but they still offer a means to an end in terms of being able to get more monies put away for retirement. Okay, preferred gain strip. So this particular strategy is, the gist of it is essentially you're prepaying your taxes that you're going to have to pay when you take the monies out of your corporation. But by doing it in this way, you're changing how the taxes are taxed. So you're going from a dividend tax rate to a capital gains tax rate. The results are significant tax savings. It is especially powerful for those who have kids who are just about to enter post-secondary education and you're going to need those monies, or if you need large sums for other things such as a large expense, a renovation, etc. Ideally, to get the biggest bang for your buck for a capital gain preferred strip, you want to have at least $1 million available to take out of your corporation. Fifth strategy: if you're at a certain stage in life, like the scenario we're addressing today, it is entirely possible that you might even have younger kids or even some debt still. As such, this particular strategy of permanent insurance works, as noted, to kill two birds with one stone, because you're able to protect your loved ones with the insurance, and at the same time, it's a vehicle in which you can save money inside it, much like an RSP, but not entirely. It grows tax-free, and you can auto reinvest it, hence a compounding result. You can also fund this policy with corporate dollars instead of personal dollars, which means you can afford potentially a bigger policy or save more inside of it. And yes, these plans can be complicated and they can scare some people away from using this as a strategy, but rest assured, this strategy can be great for the right person. Okay, so let's see what those 5 strategies that I've talked about now can do for our dentist in this particular scenario. More importantly, what they can do for you though. So here on the slide, we have the basics for the initial scenario. All pretty typical numbers. I deal with a lot of dentists and these numbers are far from abnormal. Okay, so we've got the rate of return, your salary, your one partner dentist practice, and what you're taking out in terms of dividends for yourself, your RSPs, etc. All of that, very, very typical. On this next slide, though, we can see the points laid out that refer to the strategies such as corporate savings and the UL policy, etc. In the case of the permanent insurance or universal life policy, we're going to be super funding it from the extra income that we expect your corporation to have from following Lisa's advice. And Lisa's advice indicated that you can reasonably expect to have about another $150,000 a year inside your corporation to effectively fund things. So we're going to use 75,000 of that per year for 5 years to pay for that permanent insurance policy. We're also going to be using it to fund the IPP, individual pension plan. We're also going to be taking the existing $1 million out of the corporation by way of a preferred gain strip. And we're going to, in retirement, we're going to borrow against the cash surrender value of the universal life policy as a means to getting the monies out of the corporation at a better rate than what you would be paying tax-wise. And of course, we're going to be adding our spouses to our incorporated dental practice so that we can take advantage of the lifetime capital gains exemption. Okay. So in this particular slide, we're going to see what our financial planning software predicts what your net worth will be at age 60. And this assumes that you've done nothing that either Lisa or myself has suggested to you. And so if you look at the very far right hand of this slide, you can see it's circled. And at the very bottom right hand corner, you can see what the projected net worth is expected to be based on the variables that we've already talked about. And so it illustrates for us that we're expecting a net worth of $5.6 million at age 60. That's not bad. Now, let's look and see what happens if we utilize the strategies that Lisa and I have talked about. And again, we look at the same basic slide, but you'll note that the difference in net worth at the bottom right-hand corner is now at $8.27 million at age 60. Remember, if you're going to retire at 60, you're going to need more money to pay for retirement, since you're going to have more or less an extra 5 years of retirement. And here's the thing, if you retired at 65, this difference between the two scenarios only gets larger. So we are talking about $2.6 million basically being the difference between listening to our advice and not listening to our advice at age 60. Okay, so not all the strategies that I'm providing to you are going to provide you with the same bang for the collective buck. On this particular slide, we see the before and after of using not just, of using or not using our strategies. And again, we've done the homework on a typical dentist at 45, retiring at 60 for these particular numbers. Your performance will vary depending upon your own personal circumstances, of course, and in some cases it'll be better and sometimes worse. At the end of the day, though, having an additional $2.6 million to fund those first 5 years of retirement goes a very long way, especially since those first few years can be really expensive compared to those, say, into your 80s. Okay, so let's summarize what we've been speaking to. Dentistry is pandemic proof. It's extremely resilient. Place your focus on the right things at the right time with a playbook. Those metrics that are measured will improve your plan. And remember, CDSPI, we're here to help you in a professional and unbiased manner. We can help you with that dynamic financial plan that is really next level. And the 5 strategies that we're talking about today, at least on the CDSPI standpoint, they're not the only strategies that we can use to help you. And the best time for you to look into doing any of these strategies is right now. Reach out to me or any of my colleagues who you might already be dealing with to help you work through these strategies and work them into your plan. Today, I'm going to end with a quote from Gandhi, and I couldn't have said it better myself. The future depends on what you do today. All right, so thank you everybody for taking the time to watch our video. One more time, please do feel free to reach out to either Lisa or myself for assistance. We are in fact here to help you. For the next 15 minutes, we're going to open up for questions in the chat function. Other than that, thank you again, stay safe, and we'll be talking soon.